Hello viewers, I am C. Venugopal, delighted to welcome you on the GST Simplified Educational videos. In this video, I am going to tell you about the transaction changes which would happen with regards to inward supply. So, inward supply like purchases. Now, we'll have a walkthrough of what are all the transaction changes which are happening with regards to the purchases. Now in GST regime, the changes which happened is the credit is a seamless flow, meaning you get a credit of every item, so which is resulting in reduction of your cost. So which makes vendor management very crucial because the credit availed on time saves you cost, and if you can't avail it, it adds to your cost. And all credits pertaining to inputs, goods and services, capital goods are eligible in GST, unlike in earlier regime. For those who are in VAT, the inputs on services was not available, and those are in service, the inputs on the goods were not available, right? So what is it new in the GST regime with respect to purchases? One thing which has come up very new is input tax credit, because this credit is availed first on provisional basis, and then basis on the assessed credit, the actual credit would be available, and whatever the provisional credit did not become assessed credit gets reversed in the subsequent month. So you should have a system which is capable enough of carrying forward the provisional credits which are not assessed, reconcile the unmatched credits, facilitating follow-up with the vendors. Now the details which are additionally captured are GSTN ID of the vendor in the tax master. In case of imports of goods, the bill of entry has to be also tracked and captured, which is necessary for filing. And for import of services and other reverse charge, the document number and the document date has to be captured. The credits availed has to be segregated between eligible and ineligible. In the next slide I will talk more about that. And you also have to segregate between capital goods, inputs on goods or services. Alright. So let me tell you more on eligible and ineligible credits. Under GST, your credits are classified into T1, T2, T3, T4, C2. It's not a code language, very simple way to understand. The credits pertaining to business transactions are eligible, which means if the credits are pertaining to exclusively other than business, which is T1, is not eligible. If the credits are used for an exempted products, not eligible. If the credits pertains to a restricted category which is mentioned in 17.5 like cab or catering services, even they are not eligible. So what are eligible are they are exclusively used for taxable or zero rated supply. If there is a common supply attributing to all, that is categorized as C2. So the credit which is eligible for you and credited to electronic credit ledger is T4 and C2. Now the common supplies is applicable to even ineligible business. So a portion of common supply is disallowed and added to the liability. So which is D1 and D2. So D1 represents the portion of the common credit attributable to exempted supplies. D2 represents a portion of credit attributable to non-business supply. Now D1 and D2 is disallowed and added as liability, right? There is one other change which happened is input service distributor, wherein if you are an input service distributor like a head office who collects the services on behalf of other branches. So you will be allocating the credits, or you will be distributing the credits on an actual allocable basis or turnover in that period to all the branches. So branches gets the receive TDS input tax credit of GST as input tax credit, and this would be a current asset. And for the corporate office, this is getting reversed as a current asset. Like I mention in all my videos, technology is the key for successful implementation of the GST. So viewers, you understood how much technology dependency is there even while recording your purchase transactions. Thank you so much for watching this video.